if I had to start all over again, this is what I would do. So if I had to start all over again, I would first go into the basics. So as you can see here, we have candlesticks, we have a chart, we have trends. First, I would master these things, the simple things that you see. What pairs are, does it mean if there's like a dollar index and a pair, what pairs I should trade, even though you should trade every pair, that's what I'm saying the whole time. I don't say you should like trade these these things. Obviously not. There's no volume, but there's no big difference other than a little bit of a volume gap or something, volume difference than Euro S dollar and I don't know, Euro and Japanese yen. You can trade everything you want since the concepts are the same. It's all about retail traders' psychology and how they act. For example, we have an impulsive trend, you have a correction. This is emotions. And this happens everywhere. So it doesn't matter which pair you trade. So I would start with those things, learn what I should focus on. I would learn one strategy that I like to do and just completely focus on it, hyper focus on it. I wouldn't do anything else. I learn the basics, learn how candlesticks look like, learn how candlesticks look like in a graph, learn what market states there are, so consolidation, trend, the easy things, okay? I would also learn this. Then I would learn the basic things like support resistance and look for stuff that I like. If I like support resistance, I would trade support resistance. So we have this, we can enter here. You know, you could be trading everything you want. It just has to match your style. So if you think, oh, support resistance matches me, I like to do it and I understand it instantly, I have a feeling for that, or I get the instant intuition for it and I build up the concept really quick and I really know what to do with this concept even though I just started it, then you should probably do it. If you're not sure what you really want to trade, you should try different things and just find something and then hyper focus on it, backtest it as much as you can and just get the feeling for it and don't overcomplicate it, okay? This is really important. Just if you want to do smart money concept, for example, just focus on liquidity sweep, breakout structure, fair value gap, and just do this all the time. So wait for a clean liquidity sweep, breakout structure, fair value gap here. Yeah, liquidity sweep basically into the fair value gap here, sweep into fair value gap, breakout structure here, fair value gap created, retracement, and you enter. You know, just have one concept that you focus on and that you could see without marking out, and also see if it's valid or not. For example, if you see this sweep here, right? You can clearly see that it's a good sweep since we have a big wick. And just from that, I already see it because I don't even have to go on higher time frames and see if that's actually a valid sweep since you can clearly see it just from looking at it because I looked at it so much and I just got the feeling for which liquidity is the right liquidity sweep. And this is the most important thing, okay? So just build up an intuition by backtesting. And I think this is already it for the video. I will go over one more thing though, since there's a lot of questions every time I talk to persons that just start. They learn different things and think strategy, like they have to have a strategy that works every time or something. That's not true. Like every strategy can work, okay? So you could be trading support resistance and have a higher win rate than someone trading high ICT, I don't know, stuff like really complicated stuff because it's all about simplifying it and not going with all the people. So just learn something, master it, and get individual. So have rules for yourself that no one else does. For example, let me see. You can see that this is a good sweep. I don't really have rules for it, but you can see that there's two big bodies instantly after. This indicates a good sweep. And then you can see, oh, okay, it goes down. This would be the stop loss, and this probably the take profit since it's a good liquidity point and it hit. Like it's really simple, okay? It's really, really simple. If you just master three concepts, or not three concepts, like three things that you really like, and just do that, and don't switch strategy. Don't think it's too easy. Why would I be profitable with it? You have to have confidence in the market and still like respect everything, okay? You shouldn't be too naive and think, oh, I could just go with the trend. But you should also not be, oh, won't be ever be able to do that because this is just stupid. You can be profitable if you just stick to the rules, stick to one thing, and just master it. It's not even a strategy that you should master. You should master three concepts, or not concept, but the fair value gap, for example, the pair of structure and liquidity. If you master this and just have rules for that for yourself that you found out by backtesting, that you don't even have to write down, just get a feeling for it, then you can make it. Or, for example, I only take fair value gap if it's above the 50% Fibonacci mark. Here, I would see this as a valid fair value gap above this. This would be something I would call a rule that you could really write down, but there are rules that you can't write down. It's just you see the chart, you see where price wants to go, and then it just matches, or you just have the feeling that it matches, and then you can trade it. This was the video already. I hope you learned something, and please subscribe and like the video, and see you next time. Bye bye.